Welcome to Weekly View on Markets. This week, Nifty has continued its uptrend and closed at 18,512 with a gain of 1.12%. Bank Nifty gained around 1.3% and closed at 42,983. Mid cap index closed with a gain of 2.17% and small cap index gained with 2.4%. India VIX, that is the volatility index, cooled off by more than 1% and is at 13.33. So, as per my last week's view, I had indicated that market will consolidate and the uptrend is intact. This week we have seen overall participation from all sectors and from mid cap and small cap sectors also, and market has kept up its uptrend. The broader markets consisting of mid and small cap stocks have outperformed during this week. Let us look at different sectors of the market. The PSU banks continued their uptrend and closed this week with a gain of 5.18%. Media stocks gained with 5.42%. Information technology stocks gained about 2.24%. Oil and gas stocks gained about 2.47%. Most of the sectors were in the green and gained about 0.5 to 1.5%. Sectors like energy and realty were only the two sectors which ended with marginal loss during this week. The participation from most of the sectors, as well as from mid cap and small cap indices, indicates that the overall sentiment is very positive in the markets. Despite the short term volatility, markets will continue its uptrend. And this week we have seen Nifty has closed at all time high of 18,512, and Nifty soon will cross previous high of 18,600 and will record higher levels in the coming days. Now let us look at chart of Nifty and try to understand what is going to happen in coming days. See, this is a daily chart of Nifty. If we look at daily chart of Nifty, this has formed something called a flag. This is the pole of the flag, and this is the cloth of the flag, and this is the lower level of the flag. So with this, Nifty is set for a huge uptrend as per the chart indication. This up flag is a bullish uptrend indicator. It is called a continuation pattern, and with this we'll see that Nifty in coming weeks or in months will cross 19,000 levels very easily. This is what the chart indicates, and global developments and global headwinds may delay the target, but ultimately the target for Nifty of 19,000 will be achieved very soon. And we are seeing strength in the mid cap and small cap indices also. So that gives me confidence, saying that the overall undertone is very bullish in the market, and what chart is indicating will come true. Now let us look at some of the fundamentals of the market. See, many people have started feeling that market has given a rally and market has become overvalued and market will correct. So a lot of predictions about the market is there. But if we look at valuation, market touched a high of 18,600 on 20th 10 2020, that is last year, October. That time Nifty PE was 34.37. Now again market is at around 18,500 and Nifty PE is present Nifty PE is 22.25. The PE value, price earning multiple of Nifty has fallen almost from 12 points, that is from 34 to 22. Why this has happened is because of the earning growth of the Nifty companies. And market fundamentally goes up whenever there is a pickup in the earnings of the companies. This is what we have to keep it in mind on a valuation basis, that is on a price multiple valuation basis. Nifty was at a much higher valuation last year at the same level, but today the valuation is much lower and it is trading at a fair valuation and we are looking for earnings growth. The economic fundamentals indicate that the economy is going to grow and that will result in the higher earnings for the companies. So that is why I feel that the present valuation of Nifty companies at 22 is a fair value. Slightly it is at a premium, but still it is people can invest at this level. On a price to book value basis, last year it was at 3.37 price to book value, the Nifty valuation on price to book value basis. Now it is at 4.35. On a price to book value basis, it looks higher. Why? Because many asset light companies, they have come into the Nifty index, and many asset heavy companies, the traditional industries, they have gone out of the Nifty index. When the asset light companies come into the index, their asset base is small. That makes them uh, this price to book value, which is based on the asset side valuation of the companies. That is why the price to book value looks a little higher, but nothing to worry. When we are on a growth cycle in earnings of the companies, higher price to book value should not be a big worry for us. So definitely this is the level to invest and remain invested for coming months and years. I'm sure people will make very good returns in next 2 to 3 years if they invest at the current level. And Nifty Mid Cap Index PE is at 24.34 and a price to book value of 2.97. So Mid Cap Index also looks at a, I can't say exactly fair value, but slightly at premium, but reasonably good. Looking at the prospects in earning growth, this valuation of Mid Cap Index also is reasonable. People can invest. Small cap 16.91. So, and price to book value of 3. So out of all the three indices, it looks to be, appears to me that the small cap companies are available at a cheaper valuation on a price to book basis as well as on a earning multiple basis. So look for very good, fundamentally strong small cap companies and remain invested. Otherwise, you can also look for mutual funds in the small and mid cap sectors and invest in those mutual funds, which I feel will give very good returns in next 2 to 3 years. So oil price is at 86.62. There is not much change from the last week. Lower oil prices below $90 benefits Indian economy hugely. 70% of our crude requirements are imported. So low oil price benefits our economy and it will bring the inflation down and it will give a headroom for RBI to control inflation without increasing interest rates to a much higher level. and lower interest rates is good for corporates, and if the interest remain steady at the present level, it will help the corporates to grow their earnings, and earnings growth will definitely take the market to higher levels. So USD INR also is at 81.69. About 3 weeks back it had touched 83. From there it has come down to 81.69. Majorly because the US dollar index, which was at 114, has come down to 105 level now. That is the reason that we are seeing rupee is also appreciated from 83 to 81.69. To sum it all, the charts look strong. The chart structures look set to go to higher levels. The overall macroeconomic fundamentals look good, and the valuation looks fair at this point of time. So my advice is for the investors to remain invested in mutual funds, continue their SIPs, and those who are interested in investing in stocks directly, choose proper companies with good business models, with strong fundamentals, strong balance sheets, and you will make very good profits in next 2 to 3 years. This is all for this week. So if you like my video, please put your comments, share it with your friends, and please subscribe to the channel. So see you next week again. Thank you.